Hey, welcome back to The Dive. Oil prices, interest rates, uranium, and silver are some of the topics that our guest will deep dive into today. He is a veteran investor and speculator. The great Rick Rules joining us today. But before we bring Rick on, just a quick reminder to tap that subscribe button for me, please. Hey, Rick, welcome back to The Dive.
Always a pleasure. Thank you for having me back. And I hope you have a happy and prosperous new year.
Oh, thank you so much. Back at you. All right, so let's begin here. Oil prices rose this week as a result of tension in the UAE, sending oil to a 7-year high. Do you think the geopolitical tension added to ongoing signs of tightness across the market?
I think that the principal reason for the increase in oil price is simply that markets work. And the low oil prices that we experienced a year and a half ago, combined with the macro climate around climate change, means that the oil industry worldwide has underinvested in sustaining capital. Recent estimates suggest that the industry as a whole, including state-controlled firms, are delaying $1 billion a day in sustaining and new capital investments, which will constrain supplies in the face of ongoing demands. That isn't to say that geopolitical conditions, as an example, the possibility of overt hostilities with Russia over the Ukraine, or Kazakhstan, or hostilities in the Persian Gulf couldn't lead to a temporary spike. But the truth is that the high prices that the industry is enjoying and consumers are feeling pained by is a consequence of years of underinvestment in productive capacity and the new regime of the higher cost of capital for oil companies in the face of lower share prices and decreased availability of credit. Sorry for the long-winded answer, but it's a big question.
No, it was perfect. Thank you so much for answering that. Okay, so let's move on here. Fed Powell said that the central bank is willing to do anything to keep inflation under control, and mentioned that the current inflation will last into the middle of 2022. Do you think the Fed will start moving rates up in March? And what impact do you think interest rate increases have at this point?
I would point out that Mr. Powell was probably not the first government official in my life to lie to me knowingly. It would appear that the ability to control inflation is well within their control. As an example, they could end quantitative easing actually, which is to say they could stop counterfeiting. Another thing that they could do would be to allow the market to take control of interest rates. It's worthy to note, Cassandra, that if you look back over 30 or 40 years, the US 10-year Treasury has usually had a positive real yield. Given that the US government itself says that the currency is depreciating at 6.5% compounded, that would take the rate on the US 10-year Treasury to 7 or 7.2%. All Mr. Powell would need to do is allow the interest rate to rise to its market level. Of course, that would quadruple the borrowing costs for governments and quadruple the borrowing costs for households that have $14 trillion in aggregate debt. So I don't think it's going to happen. The truth is, as you and I described the last time that we were in conversation together, the Fed is literally between a rock and a very hard place. And irrespective of what Mr. Powell says, let's look at what he does. That being said, he would love to let interest rates rise because he needs an arrow in his quiver to lower them if the economy weakens. It's tough to lower them from zero.
Yeah, makes sense. All right, well, let's move on and talk about uranium here. The China
Lovely.
Nuclear Energy Association announced the world's first operating SMR, using helium instead of water to produce power. Do you think that SMRs are likely to contribute meaningful amounts of carbon-free power?
I do. We've been working, we, meaning the industry, has been working on this for a very long time, and the Chinese technological achievement is formidable and speaks to the pragmatic regulatory regime that exists in China. The Chinese, many people don't know, have publicly acknowledged that airborne particulate pollution, often generated by burning, pardon me, fuel oil or coal, according to them, kills an estimated 500,000 Chinese a year. So the Chinese regulatory environment around carbon-free energy is more acute than it is other places. The truth is that I expect nuclear power, irrespective of the big thinkers' disregard for it, to provide increasing amounts of economic baseload power, almost irrespective of technology. The advent of the SMR, particularly in countries with more permissive regulatory environments, or put differently, countries with greater needs, in particular China, I think is a very positive environment, both for their accomplishment, pardon me, both for their environment and for their economies.
So what is your view on the uranium market right now? It was very hot in the second half of 2021. Do you think we could see another leg up?
The fact that both the uranium price and the prices of uranium equities has been off sharply makes me much more bullish. I was a very, very public proponent of the uranium business, as many of your listeners will recall, for 3 years, which is to say I was a bit early. The uranium price then moved in some measure, I think due to Sprott and the Sprott Physical Uranium Trust, from a low of about $18 a pound to a high of $52 a pound before backing off. And the uranium equities measured by the ETFs are now off between 30 and 35% from their tops. I am, as we speak, redeploying capital back into the uranium equities. My belief is that if you afford yourself a 2 to 3 year time frame, which I think you have to in investing, that the uranium price goes to what the International Energy Agency describes as the incentive price of production, which I suspect now is about $70 US. So I expect a move in the yellow cake in uranium itself from 45 to 70, or perhaps an overshoot. And I think if that occurs, a well-chosen package of uranium stocks in the 2 to 3 year time frame gives investors and speculators a double or a triple. That doesn't mean that they won't be softer in the near term. I should point out to you, Cassandra, I'm confident enough about this that I'm putting on a 6-hour online Uranium Boot Camp, March 19th. People later in this interview can find out where to find out from me more about this Uranium Boot Camp. I am as excited about uranium as I have been any time in the last 3 or 4 years. While many of your listeners may have their faith shaken by the fact that the uranium prices have fallen by 35%, or the equities prices have fallen by 35%, I'm attracted to that. I believe that lower equity prices represent a sale, and I love goods on sale.
Awesome. So is the Uranium Boot Camp going to be a Zoom thing so people all around the world can go?
Yes, absolutely. Be a 6-hour or 6.5-hour presentation. We're going to have, as an example, representatives from China General Nuclear talk about the Chinese view of the uranium market, a representative from Kazatomprom, the largest uranium producer in the world, somebody from Cameco, the largest producer from outside Kazakhstan, industry experts. It's going to be a lot of fun. If you care deeply about uranium, I wouldn't describe this as amusing. I would describe this as really boot camp for investors and speculators.
Okay, awesome. We'll have to check it out and get more details about it. So let's shift to talking about silver here. There's been incredible volatility in the precious metals market. Where do you see the demand for silver in 2022?
In the very near term, my suspicion is that precious metals prices go down. It would appear that the Fed in the near term is going to succeed in tightening interest rates. If interest rates go up, the US dollar strengthens and the denominator around silver and gold are US dollars. So in the near term, my suspicion is that gold and silver prices go lower, not higher. Looking further out, the ability that the Fed has to maintain those higher interest rates appears very doubtful to me. Let's go back to some arithmetic that we did earlier in this same interview. Over the last 40 years, the interest rate on the US 10-year Treasury, which is the world's benchmark security, has been positive after depreciation of the dollar. Think about the implications that would have on the US economy. Think with the depreciation of the dollar at 6.5%, what would happen if it cost the government 7% rather than 1.6% to borrow? Even more interesting, traditionally, the 30-year fixed mortgage rate has had a higher interest rate than the US 10-year Treasury. So what if the 30-year fixed mortgage rate went from 3.3 or 3.4 up to some number like 8 or 8.5? Think what would happen to first-time home buyers if rather than paying 3.5% for their money, they had to pay 8 or 8.5. What do you think the probabilities would be that the government would keep their nerve, or the taxpayers would let them keep their heads in a circumstance where free market interest rates prevailed? So I believe in the very near term, precious metals prices are probably lower. I think in the intermediate and long term, the price of precious metals is inevitably higher, and probably much higher.
Mm-hmm. Are you buying into the silver squeeze thesis?
I'm buying into a different silver squeeze. I'm amused, frankly, at the democratization of interest in silver. Hundreds of thousands or perhaps millions of people worldwide buying fairly small amounts of silver and diversifying their savings from only fiat currencies to silver. But that isn't the real silver squeeze, Cassandra. The real
silver squeeze?
Real silver squeeze is simply reversion to mean. Right now, in the US market, precious metals and precious metals related assets comprise about 0.5% of the total savings and investment assets that Americans own. 0.5%. The 3-decade mean is between 1.5% and 2%. If demand for precious metals merely reverts to mean, demand for precious metals and precious metal securities doubles or triples. My belief is that we will return in some measure to the distribution of assets that we saw in the 1970s, which is to say that the biggest institutional investors in the world, the biggest endowments, the biggest pension funds, the biggest insurance companies in the world add precious metals back into their portfolios as an asset class. It's interesting to note that for 40 years, we've seen strengthening fiat currency and lower interest rates over time, which means that we've had a bond bull market, a tremendous bond bull market. Remember that bonds trade inverse to interest rates. So the decline in interest rates on the US 10-year Treasury from 15.6 to 1.6 means that we've experienced the greatest bull market in bonds in history. I believe that market is over.
Okay.
The traditional institutional investor has been on something called the 60-40 plan, which is to say that their portfolios have been 60% equity, 40% debt. But the biggest investors in the world now recognize that bonds as an asset class cost them money. You can't be a professional money manager responsible for the operation of a university 20 years from now, or a pensioner 20 years from now, if 40% of your portfolio generates a negative real rate of return. The real silver squeeze will happen simply through mean reversion, where the largest institutional investors in the world take their silver allocation from 0 to 2 or 3. One thing before you give me up, I always encourage your listeners to correspond with me, and to encourage them to do that. Any of them that go to my website, ruleinvestmentmedia.com, if they list their natural resource stocks, I'll rank them 1 to 10, no obligation, and send them back. Further, if you are interested in my Uranium Boot Camp, in the comment section, write Boot Camp, and I'll send you information about the Uranium Boot Camp.
Thank you so much for joining us on the show today, and I look forward to talking to you again in the future.
Thank you as always, Cassandra. I look forward to a rematch whenever it's convenient for you.
Thanks so much for tuning in today. We'll be back again tomorrow with the latest news and updates, so be sure to stay tuned by hitting that notification bell and smashing subscribe.